What's up everybody? Nate here. So the United States economy is in a really bad spot right now. From the stock market to the real estate market to commodities, Bitcoin, and everything in between, the United States is facing a harsh reality in 2022. Millions of Americans are struggling financially because interest rates are going up, and inflation is also reaching over 40-year highs. And with all of that being said, there is now talk of a potential recession in the United States in 2022 or in 2023. This means that we could be facing layoffs and unemployment, and consumers are just not going to have any money anymore, which is a big problem because Americans still have bills to pay. Nobody can seem to catch a break right now, and people are wondering if there is anything they can do to kind of avoid financial ruin, not only in 2022, but in 2023 and beyond. So is there anything that Americans can actually do here? Is there something that Americans can do right now to not only protect themselves today, but to actually build and grow their wealth for the future? That way they can avoid these problems in 2023 and beyond. Well, you came to the right place, because today we're going to talk about the 5 things that anyone can do to protect their finances today and come out a winner during the next recession in the United States. But before we get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those 2 things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now the first thing I want to talk about comes from your budget. When we run into a recession in 2022, and if we see a recession further into 2023, the most important thing that you can do right now is to master your own finances. This means knowing exactly how much money you have coming in every single week or every single month, and then giving every single cent that you make a job. The first thing that I want you to do is build a budget. This is going to be something that you can look on every single month and know exactly how your money is being spent. That will help you decide if there's anything that you need to cut back or things that you need to add on to in order to protect yourself. A budget is your absolute bare minimum financial base, and you need it in order to build on the rest of the things on this list. And I know building a budget right now is a little bit difficult because prices in the United States are kind of skyrocketing and going up and down like crazy. But building a budget is less about pinching pennies and more about building a solid financial plan that can eventually protect you. It's about knowing what you're doing with your money, and this is going to come into play as a recession hits and things start hitting the fan. You have to know exactly what's going on with your money, so you need to build a budget. One of the easiest ways to create a budget is to look at the 75-15-10 plan. This means that for every single dollar that you earn, you are going to allocate 75 cents to spending on things that you need and spending on things that you want. The 15% goes towards investments. You are going to put this money into an investment account, however you choose to do that, every single month for every single dollar that you earn, and then 10% goes towards savings. So you can build an emergency savings fund or a long-term savings fund. Now the 75-15-10 plan is built for those who have a lot of debt or have a lot of obligations. So if you have a family or you have a spouse and you have a lot of bills that you need to take care of, then you're going to want to spend more of your income right now on spending. However, if you don't have a lot of obligations, say you're younger and you don't have a lot of bills to pay, then you might want to follow the 50-30-20 plan. It's the exact same thing, allocating your money towards the same exact things, except for this time, 50% of your money is going to go towards spending on things that you need or want, 30 is going towards investments, and 20 is going towards savings. It really just depends on what your financial situation is, but this will help you create an effective budget. Now, the first thing I want to talk about with a budget is going off of that last number, either 10 or 20%. You need to put money aside for savings. If you have nothing in your savings account right now, then you are basically setting yourself up for failure in case we do run into a recession in 2022. It is crucial for your financial base that you have an emergency savings fund. Before, a lot of financial advisors would tell people to save around $1,000. This would cover you for most expenses, but in 2022, you need a lot more because inflation is at an over 40-year high. Things cost a lot more now. So I personally recommend that you start with between $2,000 and $3,000. This is going to protect you from most of life's disasters. If something happens with your car, if your AC breaks, or if you get laid off in the short term, you should have enough money between $2,000 and $3,000 to protect yourself for about a month or two. This is super crucial because it's your financial base. You now have a budget, so you know exactly where every single dollar goes to every single month, and if something happens in your life, you don't have to go towards debt in order to pay it off. You have thousands of dollars in the bank. So that is step one. Step two is you need to stop saving. And I know that kind of goes against what I just said, but once you have that $2,000 to $3,000 saved up in the bank, you do not need to save anymore. And let me just clarify here. You can save a little bit more if you want to. If you want to protect yourself for the long term, say 2, 3, 4, 5, and even 6 months, then yeah, you might want to put a little bit more money aside. But you cannot save your money forever. The reason being is because the more money that you have in the bank, the more that money is getting eaten away by inflation. Like I said, inflation right now is around 8.3% in the United States. That means your money is losing value by 8.3% every single year. And there's no real point to keep it in there if it's just losing value. Instead, you need your money to work for you so it can start beating inflation. But like I said, it really just depends on you and your financial situation. If you don't have a lot of obligations and you don't have a lot of things to worry about, then you might not want to save for that long of a time. You might not need a 6-month saving fund. If your job is pretty secure and you don't have a whole lot of bills, then you don't need to save thousands upon thousands of dollars. You only need that short-term savings. But this is all going to come down to you and again, your risk tolerance. Your situation is going to be different, so you definitely have to judge it for yourself. But like I said, that initial savings is there to protect you, and once you have it, you need to stop saving entirely. But that begs the question, what exactly happens to that saving portion of your budget? Well, now that you have that initial financial base and you know exactly where your money is going every single month, it is time to maximize your investments. So you should be taking that percentage that you were allocating towards your savings and now reallocate it to your investments. So you might now be taking 50% of all of your money and spending it on needs and wants, and the other 50% is going towards investing. Or you might have around 75% that you're spending and around 25% that you're investing. The point here is that you're starting to invest your money aggressively. This is going to help you in two ways. One, it's going to help you beat inflation every single year. The returns that you get on an investment, whether it be real estate or cryptocurrency or the stock market, is going to be way better than what you can get from a traditional savings account. I mean, I think the average interest rate on a savings account is around 0.01% every single year. So you're making next to nothing on your savings, and all it's doing is really losing value. Investing is going to protect you in a recession because now you have a lot more money to fall back on. Your investments are suddenly building you wealth and they're gaining value. Now, the third thing that you can do to prosper during a recession and come out a winner is try to pay down all of your debts as much as possible. The best way to do this is by looking at two different methods: the debt snowball method and the debt avalanche method. The debt snowball method basically means that you're going to pay off your smallest bills first in terms of total value. You're going to try to allocate as much money as you possibly can towards your smallest loans. Once you have those paid off, then you look at your bigger loans in terms of interest rate and just total value. The benefit here is that it's not as risky. You're paying off things in a smaller amount. It might take a lot longer, but you're doing things at a slower rate. The other approach is the debt avalanche. So now you're going to look at all of your bills, all of your debt that has the highest monthly interest, and start paying that off as fast as possible. This is a lot more risky because you're probably going to be making higher payments here and you're going to be paying off fewer loans. But it could get you done a lot faster because you're making bigger payments every single month. For both methods though, as soon as you are done paying off one thing, you start paying off the other. So if you're paying off your smaller loans and once they're all paid off, start going after your bigger loans. In the inverse, you're paying your bigger loans and then start going after your smaller loans. Now, paying off your debt is crucial to your financial future because all of that debt is just weighing you down. Sure, you are starting to invest, so you are starting to build your wealth, You know exactly what every single dollar is doing because you gave it a job in your budget every single month, and you have an emergency savings fund. But the problem is you're still not really getting ahead in life because of high interest debt. If you have high interest debt, say 5, 10, 15, and even 20%, which is not uncommon for a lot of credit cards, well, chances are the return you're getting from the stock market or your other investments is not high enough to outweigh your debt. So all of the money that you're earning through investments is kind of going in the trash because all of your debt is growing faster than your investments. This is why you need to pay it down as quickly as possible, because the sooner you can do that, the sooner you can start building wealth and leaving your debt behind. So that is number 3. So let's move on to number 4. The fourth thing is to continue to invest. Now this kind of seems a little bit redundant because of course you're going to invest, but I see many investors and Americans run into this problem time and time again, and it's constantly putting their finances at risk. The stock market and the cryptocurrency market and the real estate market are in jeopardy right now. Things are looking bad because our economy is on the verge of a recession. Many Americans make the mistake of pulling their money out or putting their money into other things and stopping to invest because they're not sure what's going to happen next. This is a big mistake because what you have to understand is market crashes and market corrections like this go through cycles. We have seen this before throughout history. The stock market has crashed many times. Our economy has gone through recessions many times before. But the thing you need to keep in mind is this builds an opportunity for you to actually grow your wealth even faster. Investing is risky. You are never guaranteed to make money in the stock market, but to be completely honest with you, everything in life is risky. Investing is risky. Not investing also carries its risk because I know if I put my money in the bank in a traditional savings account, well, I am losing value on it every single year. But there is a potential, a good potential, that I could see a pretty serious return on my money in a passive investment like an index fund or an ETF. All throughout history, the stock market has recovered. Investments have recovered and our economy has recovered, always to set new record highs. This means that you can't be emotional. You have to look at your investments and create a long-term plan if you want to have money in the long term. This means that when you have a stock market crash, the best thing to do is nothing. Yes, it's going to hurt in the short term. Our economy is going through the ringer right now and you're probably losing a lot of money and you're getting scared. I totally understand that. But if you have time, if you're young, say in your 20s, and you plan on investing for the next 30 and 40 years, well, the best thing you can do is to just leave your money there and continue to allow it to appreciate in value. In addition, when the stock market goes down, you have to kind of look at why it's going down. Typically, it's because of economic conditions and the Federal Reserve. It's not because the companies on the New York Stock Exchange are fundamentally flawed. This means that you can get in on all of those big companies like Amazon and Apple at a discount because they're all going down, but they're not going down because they're bad, giving you a bigger opportunity to grow your wealth. So like I said, during this time, the best thing you can do is to continue to invest. Don't get scared and always advise your financial plan beforehand. And number 5 is definitely keeping up to date with everything going on in the business and financial world. You need to stay up to date with everything that's going on every day because that is going to influence how your finances function in the future. So you're going to want to keep tabs on the stock market, what investor and CEO's expectations are, what consumers' expectations are, and that will help you build your own idea of what exactly is happening in our economy, and so you can invest accordingly. This isn't about trying to predict anything. It's not about looking at what the Federal Reserve is going to do next and what investors are going to do next as well. This is all about looking at what is happening and then trying to make a solid plan for whatever happens. That will protect you in the long term. And I know you're probably watching this video and saying, well, Nate, I'm losing money today. Nobody wants to lose money right now, especially if you are close to retirement age and you have a lot of your money in the stock market. If you want to make money right now with your investments or in the business and financial world, well, then you're going to have to keep a lot closer of an eye on what is happening. This is where investor expectations is going to come in handy. This is where Fed expectations are going to come in handy. Look into things like I-bonds and earnings reports every single quarter for the New York Stock Exchange and these businesses. You are going to have to do a little bit more guessing and a little bit more predicting if you want to try to make money right now. This is very risky, but like I said, everything is. It's not impossible, but I will caution you that if you try to predict things and make decisions right now, well, then there's a good chance that you could lose a lot more than if you just try to play it safe and protect yourself for the long term. The whole point of this entire video is to continue your financial education. That way you know your money a lot better. Money in our society is kind of a taboo topic. If you like money, then you're seen as kind of a bad person. But what we have to understand is money is a part of life. It's not the only thing in life, but it is a part of it. It can maximize yourself and all of the people around you if you use it the right way and have good mental priorities. Money is definitely not a bad thing, and we should talk about it a lot more, which is exactly what we do on this channel 7 days a week. But the more you know your money and the more plans that you make with it and the more you know yourself and your goals, I can almost guarantee you that you will come out a winner during the next recession or economic downfall or stock market crash. This is because you'll always be looking for opportunities, and you'll be in a really good place to do so because you have a budget, because you have an emergency savings, because you already have investments and are building wealth and have really low debt. And like I said, that could mean that you gain a whole lot of money, and money that can help others, money that can suddenly financially educate other people. And that in general makes our entire society a whole lot better, just from 1 or 2 financial decisions on your part. And to me, that is a great thing. But now I want to hear from you on this issue. What do you think about these 5 things that can help you become a winner during the next financial recession? Is there anything that I missed in this video? Is there something else that could help every single American to grow their money and build their wealth during a recession? If so, let me know in the comments below before you go. But that is it for today's business and financial news breakdown. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.